Hey, what's good, YouTube? What's good? This is Crist Hendricks. So today I'll be showing you guys what's been happening the past week or the past 2 weeks. Which trades I've been taking with Manando, which signals we've sent to the group that were very successful. Um, so basically I'm just gonna jump into my trading view straight away and yeah, so this is the first chart that we come across, which is Euro CAD, and this was fairly like an easy trade, very simple. Setup is not too complex. So basically, let me quickly just erase everything. Um, so I didn't even scale up to probably the daily time frames and so on. So I just quickly jumped into the 4 hour time frame and started working from this. So um usually the first thing that you do is spot your levels, your lows, your highs. So first thing is the obvious one, the low. As you can see, it's a double bottom right there. And then around these areas, that's when we had our highest high. So you can see it's like a W, it's a double bottom. So what that means is um the price is bound to go up, right? Um, as you can see. So we're just gonna zoom in since we know our direction right there. And remember the market moves in two formations, right? Which is an impulse followed by some kind of correction or continuation, whatever you guys call it, but this is how it looks, and the price keeps going back up, right? Or continues wherever it's going, whether it's an impulse to the downside, a correction there, and so on. So uh, that's the two um phases the market moves in, basically. So I'm just gonna scale down to the hourly time frame. Sorry about that. Um, Let me zoom out so we can see what we're working with. Um, so as you can see, we had an impulse right there, followed by a correction. Then that's your continuation of the impulse. So what we need to do is spot the corrective movements so that you can place your trades basically based off that. So as you saw what I raised, um the price was around these areas, and that is what I was working with. So let me go ahead and remove that and get my trend line. So I had this correction right here. This is our support and had my resistance over there. So as you can see, we have at the support where we're gonna base our buy from, because it's a continuation to the upside. So we need to base our entry off the support, right? So you have the first touch on your trend line, the second touch, and the third one. What I usually say about these touches, the third touch always has the highest probability. Um, okay. So, okay, let me just go ahead and erase those. And so basically the price rejected. As you can see, we had this huge pin bar right there, or wick, or whatever you call it. Um, and then the price Oh, and I'm not using like the candlestick graph. As you can see, this is the Heikin Ashi. So the candlesticks or the bars or whatever you want to call them, they look different. They're not your traditional candlesticks. So uh the advantage of this type of chart is that you can see where there's momentum. So basically when we zoom into to these bullish candlesticks, you can see that there are no wicks right at the bottom, which gives you uh confirmation that it is a strong movement or momentum to the upside. As you can see, none of these have wicks at the bottom, which means the price is firmly going up. So this is why I use this type of chart. Anyways, those were that was like a disclosure for all those people who were like, "Oh, why do your charts look like that? Why do your candlesticks look weird and stuff?" So that is it. And usually after the rejection, which was this red candlestick right here, I wait for maybe two bullish candlesticks, whether I'm in the hourly time frame or the 30-minute time frame. But then 15 minutes, I don't usually use 15 minutes with currencies. I usually do that with indices such as Nasdaq, German 80 and so on, USD and so on. So right here, I'll probably wait for like two. So on the third bullish candlestick, that's when I would place my trade, which was right there to the upside, right? So as you can see, the trade really went well. Sorry about that. The trade really went well. Um, as you can see over there, we had a decent movement to the upside, which was like just over 1%, which is really good. It's a huge movement, as you can see. So that was EuroCAD. We sent the signal. It was quite successful and so on. So this is GBP against USD. Um, this was like a personal trade that I took without sending it to the group. So basically, okay, let me just erase everything. 17 drawings. Hold on. Seems like there's a lot of history going on with this. Um, okay, that's cool. Yeah, I can definitely erase. Um, okay, so basically, let me just zoom in so we can see what's going on. So with this setup, it's quite easy. As you can see, you have your highest high right there and your lowest low right here, right? Um, and if you want to see the overall structure, you can just basically zoom out and just try to see what's going on. So I was not really interested in like the previous market and what was happening. Um, but then if you want to really be optimistic, you can really say, oh, it's an inverse head and shoulders, whatever. But it wouldn't play out that smoothly. It's so many things are gonna happen before even that setup decides to like actually, you know. So I was just focused on what was happening over here within my two horizontal bars right there. Um, because it's just like quick trades, nothing really. Long term. So as you can see, Um, it's quite easy. Let me see something. Okay, that's cool. Let me bring this over here. Um, just hold on. So as you can see, we had a double top right here, and then the price really just sold off. And then as you can see, there's like some kind of correction right there. Whether it's gonna correct and continue to the downside, or it's just gonna correct and then um reverse to the upside, right? That doesn't matter at this point because we're not gonna trade and hold till that point. So what I saw with this one, oh, and this is where the price was, right? So only this was formed basically. So anything outside this zone to the right hasn't formed yet. So um okay, that happened. So what I saw was this setup right here, basically, right? I had my resistance right there and my support right there. So I was predicting the market to reject from that point to go back up for a 1, 2, 3 touch formation, right? Um, cool. Um, I waited for that, and the price eventually did get to this point, and that is when I was looking for like sales, right? Nothing long term, just short term, nothing long term really. So that was what I was waiting for personally. And okay, let me go to the 2 hour time frame. So as you can see, it's basically the same concept we had from this point right here. We had our impulse to the downside and then a huge correction sideways, right? So I waited for the price to maybe like let me put this aside, maybe to reject at this trend line, but the price really didn't reject. It broke out, right? It broke out instead. And there's really no need to panic once the market starts acting like this. So what you do when the market just breaks out of your structure, you just need to refer back to the previous highs or previous lows. So this was the previous one. So as you can see, it formed like a double top on this zone from the previous high. And for you, that is like more confirmation that this is definitely gonna sell off. And okay, let's go to the hourly time frame to check any reversals or whatever you guys might be interested in. Because I don't really pay that much details anymore um in the market because once you know all your reversals and all those things and you know how they influence the price at certain times, you become accustomed to those things and you don't really like point them out or like draw them or whatever. So you might see when I send a setup, it's just literally 3 lines and or 2 lines, that's it. So right, I'm just doing it for you guys to maybe understand if you guys don't really know, or maybe in this case, like a reversal candlestick or whatever it might be, right? So in this case, the price still had like some type of momentum, but then at the last bullish candlestick, you can see you had a wick at the bottom as well. So remember, I'm using the Heikin Ashi chart which shows like, okay, this candlestick still has momentum, this doesn't, right? And it shows it so clearly, you wouldn't miss it. Just so look on our way to the top from this point, there's no wick, right? Second candlestick, no wick, no wick, a little bit of a wick, no wick, a little bit, and then you have this huge wick at the basically the opening of the bullish candlestick, right? A huge wick at the bottom, followed by like a huge wick at the top as well. So it just signals you like, okay, we lost momentum. Let's look at the next candlestick. So you can see the next candlestick was bearish to the downside, right? And you had your wick on both sides, which means it's things are still not certain. So waiting for the next candlestick, you can see there's no wick, right? It just opened and sold off, right? But this is not necessarily what's happening in your meta trader and stuff. So this is just to show what candlestick has momentum to which direction, right? So in your meta trader, you might have a ridiculous wick to the upside within this candlestick where here it has no wick. So keep that in mind. This is just to illustrate that which has momentum. Um, so it basically gets rid of all the noise and all those things that can confuse you, and it shows you like a very basic, simple candlestick. So, okay, cool. After the second bearish candlestick, you can see um we had a strong movement to the downside. And the third one, so usually with a trade where we have a breakout like this on our structure, but then it rejects on some type of previous high or previous low. In this case, it's a previous high because it's like a double top right there. I would usually wait for the price to go back inside the structure, right? So you can see, okay, it broke off right there, rejected on the zone, and then it went back into the structure. So that is what I would usually wait for. And the price really went into the structure in the third bearish candlestick. So, and the third one doesn't have a wick as well at the opening, which means it's a very strong movement to the downside. So right after the third candlestick, I placed my trade right there. As you can see, even the fourth one has no wick. This is why I love this kind of this type of chart, hiking Ashi or whatever you want to call it. So you can see the price did sell off to the previous low, which is our take profit right there. So this is a personal trade that I took for myself, and a friend of mine, we were discussing this setup. So we both took it, and that's what we got out of it. So moving on to the next one. So this one is it was quite tricky. As you can see, the price is just, you know, doing what it usually does, which is really confuse you. But the price really didn't hit our stop loss just yet. As you can see, it was chasing it. So let me just get the full screen. It was chasing our stop loss right there, right? Because I based my trade off this setup right here. So this is the 4 hourly time frame. Let me go to the 2 hours. So let me just remove this, put it aside for now, and let me show you what was really happening. So, okay, let me go to the hourly time frame. Okay, that's still not clear. Okay, 30 minutes. Cool. Okay, this we can work with. So you can see I never ended up like updating the setup, right? But the price was within these areas right here. So everything to the right hasn't formed yet. Um, so that's what I was working with. I noticed um we had our impulse to the downside right there. Oh, I haven't showed you guys uh the full setup. I just literally jumped straight into it. So let me just show you guys. Uh, but you can really see everything is self-explanatory. You guys can really see that for yourself. As you can see, we had a double top and like a 4 hourly time frame, right? And our structure is the same concept, which is literally one touch, second touch right there, and the third one. And after the third one, which was our highest probability. Remember the market, once you start spotting these type of movements like the 1, 2, 3 touch uh principle on like your structure, whether it's like a descending correction or in this case it's an ascending correction where it rejected back to the downside. So it really becomes very easy and the market will always repeat itself. And yeah, so that was the reasons why I was looking for sales, because we have our double top on the 4 hourly time frame, and then the second top, the price got there in a correction, where you had your 1, 2, 3 touches on your resistance, right? And the third touch has the highest probability. You had your rejection right there and a huge impulse to the downside. So let's focus on that impulse to the downside. Um, so we can go back to the hourly time frame right there. It's cool. Let's work from that. Uh, Let me get rid of this drawing tool. So you can see you can actually the third touch, right? You could have used it for like a risk entry, but then obviously it's not entirely a risk entry because um there's still precautions that you need to take. So for an example, if you did want to sell uh, right there instead of right, right here, or so if you wanted to take the risk entry, which is not necessarily a risk entry in this case, let's go to the 30-minute time frame and just look at the behavior of the price right there, right? Let me get rid of this. Um, So you can see the price kind of formed like a double top right there again, right? Which was this one followed by this one right here. So it's basically like a double top right there. Nothing hectic. So if you go to the 15-minute time frame to really look at it, um, even if it's choppy, but you can still consider this as like a double top right there, right? So I want to show you guys something interesting. So you can see, okay, cool. That would have been your trade right there, right? For a sell. The first trade or first entry you could have made is right there. And still you need to take the precautions. In this case, you need to look at the individual candlestick, right? I'll get back to that. So this. Let me just delete it for now. So you can see you had your rejection right there. And the first bearish candlestick had pins on both ends, which means the market was still indecisive. But then the second pin had no, I mean, the second candlestick had no pin right there. It just opened and then went straight down according to the Heikin Ashi, because these charts are very different. If I open like a different chart, you might find there's like a huge wick right there. So this is just for me to um see like, okay, which candlestick has actual momentum or strength or whatever the case may be, with without all the noise. So I'll keep pointing that out because I feel like this Heiken Ashi or Ashi type of chart is literally the best thing, the best chart I've came across. Okay, you can see after the second one, you had a huge impulse to the downside. And then after the third one, no, after the second one, when the third one opens, that's when you sell. So you could have taken that trade right there. That was the first uh entry you could have had. And then maybe you could have also um drawn out the structure right there like this and trade the breakout of this as well if you missed that one. So you could have done that as well. Okay, cool. Let's go back and focus on the impulse, right? So if this video is very lengthy, just remember I'm really going into detail, um, because I want you guys to really understand. It's not literally just the setup. You need to focus on the candlesticks individually for you to like have confirmations and just to eliminate all the guesses or the what do you call this? Not just like just not being sure of what the market is gonna do. So that's cool. You had your huge impulse to the downside followed by a correction right there, right? hmm So okay, cool. So this was our first touch. This was our second touch. I was basically waiting for the third touch, but as you can see, the price just kind of like broke that resistance and shot up and then went back down. So I didn't adjust this because I think I was focused on other pairs because I don't really think most brokers have offer. I mean, they offer this um type of pair or whatever, right? Because I was like literally working on signals, sending out signals, and so I knew most people use like local brokers and they might have difficulties trading like uh certain pairs such as the DXY, or they might even have it but have like ridiculous spreads. Like yo, spreads are killing local, like killing us, these local brokers. Oh my God, bro. Like you can so but it's cool, it's cool. I'm not trying to promote or um talk bad about any brokers, so that's fine. So you can see the first touch right there, second touch, and this was basically our third touch. Let me just highlight it. So this was basically our third touch right there. And once again, dude, like if you're not trading according to like despite the setup, you need to understand what candlesticks tell you, bro. Like I'm telling you. So you can see in this case, you had a nice breakout right there to the upside. Most people were like, yo, damn, screw that bearish setup. I'm buying, bro. This candlestick is a buy. So people will like basically, you know, and okay, fine. You would think it's like, okay, cool, it's going back down for like a retest, then going back up, and you brace yourself for a buy. You're there entering. Hey, full margin, full margin. Time, dude, that's just like a false breakout. It's literally a false breakout. This is what we call a false breakout, right? As you can see, the price went back inside our structure perfectly. So remember when we enter, right? When we enter, you wait for, in this case where it's a sell, right? You wait for like a few selling candlesticks that will tell you, okay, well, it's time, like sell, it's time, right? So we had the price rejected, and then the next bullish candlestick was like, oh, ish, I don't have momentum. As you can see, the let me zoom in because I know most of y'all are gonna watch this on your phones, bruh. Like, I know. Just try to watch this on TV. For those who have like smart TVs, your laptops is cool, but your phone is like, yo, bruh, I have to zoom in all the way for you guys to see. Okay, that's cool, right? So you can see this the pin I'm talking about, right? The wick. This is what I'm talking about. So you can see this one it didn't have, so this had like nice momentum, right? So okay, cool. And then the next candlestick was a bearish candlestick. It's in a sell setup. We just want to see bearish candlesticks where we're about to place our trades, right? So cool. We had the first one. It had no wick, nothing. Like it just opened and went to the downside, according to the Heiken Ashi chart, right? Because there by your brokers, you probably have a spread right here that's literally by those levels right here, right? Okay, cool. Um, fine. And then we wait for the next one. And then the next one, same story, guys, same story. No wick, no wick, no pin, nothing. It just opened and sold off. Okay, cool. So what we do next is we open the third selling candlestick. We are catching it. So this is literally um where we enter, right? So let me just zoom out so you can see the scale of this setup. So that's where we enter. So look at what happens right after. Remember, third touch of this structure right here, third touch, and there is the highest probability, and it keeps proving us wrong. Like, okay, cool, bruh. I'm always gonna behave the same way. Like the market, that's the market literally telling you, like, dude, you 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 got me, right? You know my trick. That's literally what I do, literally every single time. The third touch, it's where I'm vulnerable. It's where like you can easily catch your W's. That's where you can catch all those profits, right? So always wait for the third touch on your setup. Like, bro, there's nothing like, bro, it's a blessing, trust me, right? It's okay, cool. And you don't need to be greedy with the market, holding for centuries, waiting for like the yo, bruh, you need to get out as soon as you lock in your profits. That's when you get out. So usually the previous low in a case of a sell, that's where you're out, right? So you wouldn't use the previous low of your setup of your entry setup, right? So usually you would wait for um you would look at the previous market where like the build up to this, right? So usually this is the previous low right there, which is literally at the same level as this point, right? So you could have used that as your TP1 for those who trade or open like a lot of entries, but then use small lot sizes, like myself. That will be TP1, and then you look at the next or the previous, because it can't be next. This is the next one, so it's the previous. It's crazy. So yeah, that's the previous one, right? Which is around these areas. So as you can see, that's TP2 or the final TP, because going beyond this, now you're just being super greedy, bro. Like, get out of the market. It's done, dog. It's good, right? But it doesn't necessarily mean the price won't get there. No, like it just means now you're gonna be holding for a whole month, nigga. Like, right? Cool. So yeah, that was the setup. As you can see, right after the TP2, the price just bounced back up. But then it's cool if you're like not sweating it, if you're like trying to hold for like a month. If you're that type of dude, if you're that type of guy who's trying to hold like a whole month, it's like cool, bro. Like if the price went back up, you're not sweating, you're not panicking, you're just chilling, right? So cool, the price is still going back down to um right, it's cool. So that was DXY. It was quite messy, as you can see. Like you're not sure if this is still like right. You're not sure, right? But then you don't need to stress about it. The main focus here was the resistance, because you trade off the resistance of a selling setup, right? Cool. Fine. Moving on to the next pair. I think this one will be similar to GBP USD because, you know, which it is. Let me just show you guys which one was it now. Why is it this one? Yeah, yeah, it was this one. So you can see it's like a correction type thing going on, right? So even here it's like, so I don't think I should like, unless if you guys really, but nah, let's just skip it, right? Cause a lot happened, dog. A lot really happened, bruh. So yeah, this is also similar to the DXY because we had a ascending structure, and then you had your double top right there, and then a correction, and so on. So we're just gonna literally just zip through. Um, oh, this is quite interesting. Gold, 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 gold. So I'm not gonna literally start from the top, right? But you can see this is the structure of gold. It's sort of like a double top, but it's sort of like a double top, which still works, and I'll tell you why. Let's focus on what's been happening here. So just look at how the price got to this alleged double top. Ooh, most will argue that is not a double top, but bruh, shut up, right? So cool. Um, you had at your resistance, you had these three touches, bruh. The magical three touches. You don't even need to worry about the support yet. It's the resistance that counts, bruh. We're selling. Understand? So okay, cool. And what happened after the third touch? You're selling candlesticks. It's what we want to see. Okay, cool. But then if you feel like the market is probably still gonna push up like this for the actual third touch, just chill out. Like, bruh, just chill out, right? Wait for the what do you call this? The the what the hell, bruh? this correction right here. I'm sorry, I'm just getting very tired because I haven't even had breakfast. I literally just, you know, straight to work. So I'm quite dizzy, bro. So after the third touch, you had a a ridiculous impulse. Like, bruh, you can see it's an impulse, right? And it broke this support right here, which just cancels out your buy. Like, your buy is just chill out right now, right, for a buy. So remember, impulse correction, impulse correction, impulse until the price decides to reverse. And when it does reverse, impulse correction, impulse correction. You know, it's bruh, like I can't I can't keep saying this, dog. It's like the price will always repeat. It's like, dude, I promise you, once you spot these patterns, everything just becomes so easy. Like, okay, cool. So let's focus on our correction right here. We go to 240, 2 hours. What? What what am- oh no, 240 is literally 4 hours. 120, right? So you can see, okay, it's a bit choppy. Obviously, it's gold. It's not your traditional currency way, like everything has to be perfect, right? This is literally an exotic pair to trade. It's like just as exotic as Nasdaq and whatever. So it's very choppy. So you really need to pay so much attention to it, right? Because you might have like false touches there, like touches that don't even exist. So you can see, let's go to the hourly time frame, right? Um, yeah, right. That's 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 our correction, right? So let's get into the business of counting the touches, right? I have this hold on, that's simple way. So I just literally switched to a line chart, bro, a line graph, dog. It's simple, bro. Like, come on, bro. So you can see this was our first touch, this is our second touch, and this is our third touch. Bruh, it's come on, bro. Like, you don't really need to confuse yourself with like a simple candlestick, bruh. If that thing is too choppy and it's an exotic pairs like gold, Nasdaq, uh, US 30, German 30, Euro 30, dude. So just switch to a line chart. Like, you will see that thing is perfect, bruh. So cool. Let's work with this, right? This is our first touch, obviously, right? Because we're using a line chart right now. We can see everything. We see, right? Second touch and the third. Bro, how perfect is this, dude? Like, but you get the point, right? So, bruh, this was ridiculous. I sent it to Manando. I'm like, bro, look at what gold is doing. Like, it's so vulnerable. Like, it's begging for us to like take it, right? Pause. But like, let me switch back to my favorite hiking. So what that line chart did is literally cancel this out. Um, it's a false. It's not really a touch, but here it looks like a touch, right? So those are like one of the advantages of like switching to like all different type of um charts. So cool. Here's our third touch. Let's focus on this baby right here. And fine, right? Let's zoom in, bro. Let's look at the candlestick itself. Like, remember, you see all kind of wicks, pins, and needles, and it's everywhere. But let's look at our entry and just look at the first. Okay, cool. The last bullish candlestick was a perfect reversal candlestick. Let me zoom in for those who are on mobile devices like a phone. Okay, cool. You can see that it's clearly a reversal. A lot of people call this doji candlestick reversal, whatever. Like the name is just ridiculous. Doji candlestick reversal thing, right? Cool, cool. Right after the right after this candlestick or reversal, whatever you want to call it, we had a bearish candlestick. That's why I rub my hands, right? Because there's no wick. After showing you a chart literally full of wicks, like wicks everywhere, right? Here, there's no wick. Our first confirmation that we are selling, right? Remember, you can like only see this on the Heiken Ashi type of chart. You are not seeing this on your Meta 4, Meta 5. You're not seeing this on your candlestick kind of chart, right? It's only the Heiken Ashi. That's the reason why I use it. It literally cancels out all the damn noise, makes everything easy. And yeah, I do recommend it. In this video, I literally said it like 10 times, like I'm being sponsored. Like, dude, maybe they should though, like, because a lot of people don't know about this. Like, maybe they should, bro. Like, reach out to those Japanese corporate uh dudes. They like, yo, dude, my man's like is out there promoting you. Okay, cool. A nice sell off there. No wick. Second chart, second candlestick, no wick, no wick, no wick, no wick. No John Wick right there, boy. So in this case, bruh, like, oh, what when the hourly time frame? Let's go to the 30-minute time frame, right? Because we don't want to enter late, waiting for two 1 hour candlesticks to form and close, right? We can just literally go to the 30-minute time frame and use two 30-minute time frames, bearish 30-minute time frames to close, which will happen in an hour because it's two 30-minute time frames, instead of waiting for two hourly time frames because there's 2 hours of waiting. There's 2 hours of the price moving ridiculously, right? And you just missing out on pips, mad pips, like mad pips. So we're just gonna use 30-minute time frame to look at this. And I did take this trade.